Good morning, everyone. This is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, June 23rd, 2025. So let's review the little bit of economic information that we had last week. Almost inconsequential, except for the Federal Reserve FOMC meeting. We'll talk about that in a moment. But in terms of data points, we had retail sales month over month for the month of May and retail sales ex-auto. So a bit of a divergence there. In terms of retail sales headline number, it was expected to be down 0.7%, came in a little bit worse, negative 0.9. Retail sales ex-auto, however, was expected to be up slightly and was not. That was also down. It was a negative 0.3. So this is consistent with what we think we're seeing, which is a slowing economy. I think it's pretty clear. We're well off the pace that we had last year at 2.5%, almost 3% GDP growth, but still it appears positive growth. Also last week, housing starts, building permits, both of those below expectations. Won't go into the numbers. They don't really drive the market, but another indication that maybe the economy is slowing. Initial jobless claims came in exactly as expected, 245,000 for the week. But the big item during the week was on Wednesday, the FOMC meeting and the rate decision, which was no change. So we're still at 4 to 4.25%. But some of the takeaways from the press conference afterwards with Chairman Jerome Powell, the indication that GDP growth, his expectation that GDP growth will decelerate. Again, we're already seeing that, so not a huge surprise. Inflation expected to bump up in the short term, believe solely based on the tariff and the worries around the tariff, which no one really has a good sense of how that's going to play out. Unemployment also mentioned that is expected to rise. We're currently at 4.2. It's been pretty sticky, 4.1, 4.2 over the last 5 months. And lastly, Jerome Powell mentioned that we should expect 2 rate cuts by the end of the year. So let's just talk about the GDP. Take a look at the Atlanta Federal Reserve for the quarter. The expectation now from the Atlanta Federal Reserve is that GDP growth here in the second quarter is a positive 3.4%. As we mention every week, this is conditioned or impacted by the fact that GDP growth was very negatively affected during the first quarter because of buy-ins in front of tariffs by consumers and by corporations, which caused a 4.8% drag on first quarter GDP growth, which came in at a negative 0.2. So quite simply, just looking at the number, if the Atlanta Federal Reserve is correct on the 3.4% growth plus a negative 0.2, comes to 1.5, 1.7% GDP growth during the first half, which seems fair. Inflation expectations, no change, no real change last week, still at 2.33% over the next 10 years, pretty low. Fed funds, the rate expectations built in the Fed funds futures market. The July meeting, there's expectation of no change, 86% chance of that happening. By the end of the year, those 2 rate cuts, 50 basis point in total, that Chairman Powell talked about, the expectation rose last week from 65% probability of occurring at least 2 by the end of the year to 74%, and the probability of 3 cuts or more by the end of the year rose from 25% to 32%. So with all that, how did the markets react? Not much movement last week. A little uptick on fixed income side, but in terms of U.S. equities, almost flat. S&P 500 down 0.12% last week. So now on a year-to-date basis, the S&P 500 is up 2.1%. Now, we keep pointing out the fact that international, domestic, the split has changed this year, more favorable towards the international markets. Not so much last week. The developed markets ex-U.S. down 1.4%. And emerging markets about the same as the U.S. market. Emerging markets down 2 basis points for the week. In In terms of fixed income, we did have a rally in the market, the 2 and the 10-year both falling, the 2-year down 9 basis points, the 10-year down 11 basis points. Really, it was due to the buildup in the concern regarding the Iranian situation with Israel, which advanced over the weekend, but markets closing on Friday still didn't know what was going to happen. So clearly a flight to quality. Fixed income up last week. The Bloomberg U.S. Aggregate Bond Index up 26 basis points, and for the year up nearly 3%. So economic data coming out this week. Existing home sales, new home sales, Monday and Wednesday. Again, won't even bother with the numbers, but they have been weaker than expected lately. And again, the expectation is for the month of May, both of those indicators will be below what they were in the month of April. At the end of the week, though, Thursday and Friday, a lot of economic information. Durable good ex transportation on Thursday. Those metrics are expected to be, well, at least the durable goods month over month is expected to be much better than last month. Month of April was an anomaly that was down 6.3%. So the expectation for May is going to be up 7.2%. Stripping out transportation, month of April, it was up 0.2%. For the month of May, again, going to be released on Thursday, expectation is a positive 0.1%. Initial jobless claims, which last week came in at 245,000, is expected this week to come in at 247,000. The most impactful day, however, of this week in terms of economic data, likely on Friday. We get PCE, core PCE, a headline PCE, personal income, personal spending, and the final review of the Michigan Consumer Sentiment Index. So in terms of PCE, again, this is the indicator the Federal Reserve uses for policymaking, setting purposes. So we do track this one really closely. The core, we'll just go with the headline PCE number. In terms of month over month, the expectation is another increase of only 0.1% for May, which is the same thing that we saw in April. So if that does indeed occur, the trailing 12-month is expected to come in at a positive 2.3%, slightly up from last month, but it's just dropping off a really good month from last year. So the core PCE number in terms of month over month, that is also expected to be up 0.1% as it was in April. Personal income, this is the one out of the week that is a little surprising, that a big downtick here, or expectations. So personal income was up huge in the month of April, positive 0.8%. The expectation is still positive, but much less so. The consensus is a 0.3% increase for the month of May. And personal spending, we're definitely seeing this at the retail numbers, spending coming down, not at the levels that we saw most of last year. The expectation for personal spending for May is an increase month over month of 0.1%. In the month of April, that was a positive 0.2%. Lastly, Michigan Consumer Sentiment number. The expectation is a 60.3 reading for the month of June. For the month of May, that was at 52.2. So it's a huge increase, way off the levels we were at even a year ago, but nonetheless, some upward movement. So that's it for our weekly economic update. We thank you so much for attending. We hope to see you next week. Thanks.